10 of 11 S&P sectors are higher. So, Shan, if I say, we're reading the rally, what is your read where we are?
Earnings continue to deliver. We talked about this last week. Where we're going to see earnings deliver. They have delivered. These companies are coming in. They are showing not only top-line growth, but they're showing, I would say, defendable margins, perhaps. And the expectation is that, we're going to continue to see some slowing on the top line, but that they're making it up, if you will, by being able to deliver better margins than anticipated. I think one of the challenges right now is that we're looking forward over the next couple of quarters and attempting to determine if what that top line impact will be. And so, in as much as we sort of looked past the Fed meeting that happened earlier this week, the economy remains critically important so that we can understand if we've actually troughed from an economic perspective and can continue to deliver that top line into next year.
Jimmy, the soft landing crowd got another boost this week. You've been looking for a 5 to 10% pullback, and you've been selling some stocks, or at least trimming or selling, to try and get ready for that. It's the pullback that may never arrive.
And you know what, if it doesn't, I will find things to buy, because you can always find things to buy. I have not made the mistake that some people make of saying, okay, well, I'm going to make a giant move out of the market because I think that the market's going to go down 5 to 10%. When you do these sort of things, and you've heard me say this, keep your cash at a 5 to 10% level. Don't make these heroic bets, because, Scott, to your point, it does look like the soft landing is intact. In fact, if there's a risk, it's the no landing scenario, which, by the way, is a risk, because the Fed will crush that, and it won't be pleasant. So that's not what I'm hoping for. I'm hoping things, just animal spirits, come down. And if this rally continues, I'll find things to buy. But I do have to say, we have to acknowledge, right, the S&P 500 is up 20% year to date in 7 months. That's a little frothy. I think you'll probably continue until September. September is a notoriously tricky month, especially when you've got a summer rally like this. So I'm sitting put with what I got. The things I own are performing very well, and I have the cash for anything that drops.
Bryn, nothing about this story was upsetting this week, I suppose. The Fed said what it did. It did what was expected. PCE inflation data came in largely in line, so that didn't upset the story. Earnings didn't upset it, obviously. Dow, had a 13-day win streak. It ended yesterday, but nothing that happened this week leaves us in a worse place. Is that fair to say?
Yeah, with the exception of Microsoft, right, which was disappointing. I think from the economic perspective, GDP to me, which I think my narrative for the year was that GDP would probably end the year around 1% or so and falling, and GDP coming out at 2.4 is really validating the stock market soft landing scenario. And the Fed, we think, is almost done. We'll see. I am still very suspect longer term that we have 13 years of zero rates, and then we have the fastest, steepest rate hike ever, and that we're going to now be the scenario where we're higher for longer. I definitely know in the commercial real estate and with the regional banks, things are not great, but that seems to be contained, and that the broader economy and the broader market have seemed to ring fence that and say, well, that's not big enough of the whole economic, because at the end of the day, we're 2/3 GDP is consumer. Strong labor equals strong consumer. So I do think that soft landing drumbeat, or just a continuation, has some legs here. I
really feel like you just underscored the whole thing, Bryn, because when you said, yeah, everything was good but Microsoft, you know what Microsoft stock is this week on these alleged disappointing earnings? Down 1.4%. The point being, Bill, is that nothing that happened this week changes the narrative that the trend is up until it's not, and that good enough earnings are good enough for now.
Yeah, it's a bull market, and it's been a bull market really all year. I'm going to echo what Jim had just said, and I've been talking about this the last couple of times on the show, is August to October, I have a little bit of fear we have a pullback. And I don't think it's going to derail the overall rally. I think we could finish the year at record highs. But I want to be prepared for that pullback. I've trimmed a little bit and kind of get ready for that. But what really pointed out of the week that I thought was most important was the GDP data yesterday. We're not talking soft landing anymore. We're talking no landing. And so my fear would be looking at the Fed watch tool, the CME's Fed watch tool, the odds of a hike in September are only 20% today. Yesterday, they were nearly 30%. The soft PCE data and ECI today brought that down a little bit.
It's like 1 in 3 now for November.
Yeah.